Okay, let's use a specific example. Let's say we have a purchase, and I have seen purchases around 800,000. Okay, let's say somebody is buying a home which needs love and care, and for 800,000, and they are putting down what, 10%? Can they?
They can. Yep.
Okay, so let's say put 10% down, 720,000 loan, conforming limit, right?
Mm-hmm.
So it's conforming loan, right?
That's right.
Now, how much money can they get? Let's say 95%. 95% will give me, let's say, let's simplify. Let's say it's work is only 80,000 to simplify.
Okay.
Can they, how much money they can get? They cannot get 80,000. They probably will get something like 70,000 to keep it up to 95%, right?
Well, it's tied off of the completed appraised value. So if the house ends up appraising for 900, okay,
Ah,
after the work is completed, then you can that's where the LTV calculation would come off of,
hold on.
not so you have a choice between the breakdown of the actual cost to fix it or the appraised value, whichever's less. So typically what ends up happening is that the total cost of the construction loan with fees and permits and all that stuff is the total that they drive the 95% LTV off of. So it's not going to be off of your purchase price. It's going to be off of the completed with the purchase price plus the cost to fix things.
okay,
So
but rule of thumb, old rule, whatever I know, is that you have to wait for period of time before a new value can be recognized.
not on this program. This
Uh-huh.
program can be done on it can be done as subject subject to the renovation, and so it'll give you that appraised value amount, and which, like I said, whichever's less, the the itemized cost to fix the items or the appraiser value, whichever one's less. So you can go up
Okay.
to 95% of whichever.
All right. That's very interesting. However, let's say because on the fix and flips, lenders don't care what condition of the property. But when we have conventional loans, lenders do care. So let's say there's an issue with the kitchen or bathroom. uh, how would this be addressed? He's buying with intention to fix it, but meantime, those issues exist.
Well, they're not going to the thing about the renovation loan itself is that is if that's included in there in the actual loan, it's not a problem. Okay, it just has to. Fannie does have guidelines that requires like you have kitchen hookups for the oven. Okay, you don't have to have that if it's on a renovation loan. Renovation loan, you just have to have the breakdown of all those items being repaired, and so when you get finished doing those repairs or those renovations, it has to meet the Fannie Mae criteria. So
Really?
it doesn't have to meet it initially. It can meet it after the fact, and
Okay.
that's why we'll have a final approval, a final inspection done on it, verifying that it is as is upon completion.
I want to clarify this number of things. This is only possible if it's a purchase, including renovation. If you buy it and then apply for renovation loan, it probably will not fly.
No, you can do a refinance on those. You can do a refinance.
No, but I have to when let's say I'm buying a property which has issue with the kitchen or bathroom.
Okay.
Can I get conventional mortgage with that?
Yes.
Oh,
You're going to be that's what the renovation is. Now, if you've torn it out and it doesn't have a functioning like you started a project at home and you took the toilet and the shower and the sink out in the bathroom, you are going to have to contend with that being completed with the renovation. But no, renovation loan is designed for that type of work. It does not have to meet um, It does not have to meet the normal Fannie Mae guidelines until the completion is done.
Interesting. Okay, so let's go through the scenario and let's use these numbers. We have 800,000 purchase price, 10% down, 720 loan, and as I said, there will be another 70,000 for renovation. Okay,
Mm-hmm.
or
Mm-hmm.
it can be 100,000 renovation,
Right.
because you are saying that then this will increase value to 900,000.
Right. So
Okay.
if your contracted items that you're getting renovated um, ends up totaling $900,000,
Yes.
okay, then basically, if that's less than what it appraises as, that's what your 95% number would come off of. So your 10% down that you're talking about is going to be absorbed into that. So your end loan, it's going to be a 95% loan as opposed to a 90% loan. That
Okay,
down payment.
95% from the 900,000 future value, which is going to be 855,000.
That's right.
Okay. And now the loan has to be based on Fannie guidance. It now becomes a high balance loan.
Yeah, yeah. I mean, you're gonna contend with that.
So now it's
If
no,
it's
but we have now we have 95% loan to value, high balance loan, which means that there is a mortgage insurance and all the rest, whatever goes with high balance loans, right?
right, I mean, it's gonna have the same mortgage insurance. It's gonna probably be a little bit more expensive than a normal conforming limit would be, but not by much. You're still gonna have your normal percentage wise. Your 30% that you're gonna have to have on a 95% loan.
Okay, okay, perfect. But then you have to be able to qualify for that new amount.
That's
So,
right.
so
And we have a worksheet. You have two separate pieces. You have the qualifying of the property with the improvements, and then you have the qualification of the income. So yeah, they'll have to be able to sustain normal. Have to have an approve eligible or an accept eligible on Freddie for them to be able to fit into theirs. So you still
okay,
have the credit portion, income portion that they're going to have to qualify with. So their debt load will have to still come back as an approve eligible in the end once they qualify off the larger amount.
okay.